Actually, my talk is going to be a bit more narrow than that. It's going to be everyone needs a safe place to save rather than live. It's a bit more modest, my talk. Let me get to know my audience. How many people here have a bank account? Huh? Really? All of you? Well, that's pretty odd, because if you were a representative of the world, less than half of you would have raised your hand. That's right. It's estimated that more than 3 billion people in the world don't have access to a basic bank account. Who are they? Well, they're predominantly the world's poor who live on less than $2 a day. Imagine you're living without a bank account, without an ATM card, no checkbook. Well, I know what you're thinking. You're probably thinking, well, if I was poor and had to live on less than $2 a day, why would I need a bank account? I live hand to mouth, limited ability to plan for the future. I don't have much money to save. Well, today I'd like to challenge you to think about savings in a slightly different way. Try to put yourself in the shoes of someone who is earning $2 a day. It's hard. I know it's hard. Perhaps it'll be easier if I put it in Seattle terms. So on a good day, you'd make, let's say, $3.15. In Seattle, that would buy you a grande latte. But on a bad day, you might make $1.50. That would get you as far as a black coffee. The $2 figure is just an average. For many people, the hardest part of being poor is, in fact, that no one is guaranteeing you income, even on a day-to-day basis. So imagine how you could survive on $2 a day. But survive you would, because you would not have a choice. What I really want you to think about is how much you'd value that extra $1.65 you made on a good day, because today is a latte day and not a black coffee day. That's why everybody needs a safe place to save. You ought to be able to put away that little treasure you make that day to carry you over on a bad day, and also to be able to accumulate these small balances over time and be able to make larger purchases, being able to pay for school fees when they're due for your children, to buy them new clothes, or to do some essential home repair. So if you don't have a bank account, then how do you save? Well, consider this woman in Kenya. One thing that she will do is just hide money around the home. But that's not very safe, not only from intruders from outside the home, but actually from family members who might discover the money and will, trust me, I'll find good uses for it. Another very common thing in practically every culture is the notion of the rotating savings group or the savings club. That's where you get together with neighbors and we each put in a certain amount every week or every fixed period of time, and one person takes the entire pot every week, and we just take turns in taking the pot. That's a very common savings instrument, but you have to wait until it's your turn to get your money, so it's hardly savings as and when you need it. And these things can break down. Once I've taken my pot out, what's my incentive to continue contributing for the next guy? So these things do break down. Another very common thing is to buy physical assets, in particular livestock, or chicken and goat. But if you need to get a little bit of money because you need to go to the doctor, you can't really sell the leg of a goat only. Or you might have to sell it at a distressed price because you need it urgently. You might not get the full value for it. It's been documented that poor people have as many as a dozen different ways of saving. They actually have much more complicated portfolios than me. I only have a couple bank accounts. Why is that? Why do they go to the extreme of managing 14 different ways of saving? Jewelry and loans to families and friends. Well, because none of them are very good. They have to take whatever's available at any point in time. None are very good. None are very reliable. So imagine if this woman in Kenya did have a bank account where she could set aside $1 or two at a time. Let me stress just how big the savings need is for poor people. Of the 6.8 billion people in the world, 2.6 live on $2 a day. That's about 40% of the world's population. If we look at the 1.6 who are the bread earners, the other billion are their dependents. How do they make their living? Well, no surprise, the biggest category, 610 million people, are smallholder farmers. Do they save? Of course they save. They have no choice. Their income comes maybe twice a year when the crop comes in. Most of the time, they're living off of savings. That's their way of life. Second biggest category, the casual workers. These are the people I was talking about today. They have to manage between latte days and black coffee days. They need to stabilize their basic expenditures in the light of volatile income, so you don't have to pull your kids out of school or reduce nutrition because it's a bad day or you're going through a bad patch. Then there's the low-wage salaried, another 300 million. They're a bit more fortunate because they have that stability of income, but that income comes in tiny little amounts, maybe weekly. They need this capacity to be able to set aside small amounts of money to be able to make that payment for the school fees when they're due. Then there's the micro-entrepreneurs, 180 million. These are the people that the microcredit industry has traditionally targeted. But notice how they're a fairly small percent of the world's poor. They need to make investments in their business, working capital. And if you think that microcredit can have a lot of impact in their lives, imagine if they can do the same thing without having to pay interest, or in fact being paid for it because they're self-funding their investments through their own savings. And then, of course, for all of them, there's the need to protect against shocks. These shocks typically would be around health issues, but some are entirely predictable life events. Someone gets married or someone dies in the family. We tend to think of the poor as a mass of people who just trundle along. That's not the reality. If you look at a cohort of poor people, say over 5 years, you'll find that a fairly large proportion of them have escaped this $2 a day threshold. The problem over the 5 years, the problem is that an equivalent amount will have fallen back into poverty. The best thing we can do to eradicate poverty is to find ways to keep people out of poverty. People will find ways to lift themselves up. But if they have to go back to the beginning and with these events that set them back many years, we're never going to progress. So I hope I've convinced you that financial services are very much needed for poor people just to be able to manage their daily lives. The point of saving, let me stress, the point of savings is to be able to buy stuff, to be able to invest in their lives. This is not long-term accumulation necessarily. So the question is, where are banks in all of this? It is their business to take people's small amounts of money and to safekeep all of that. Well, take a look at this. It just happens to be Nigeria, which is the most populous country in Africa. 79% of the population is not being helped in small ways by the banks. 75%, in fact, have never been touched by a bank. What's happening? Why is this? Well, it's not because of the problem is not because of lack of demand. The problem is one of cost. It is simply too costly for banks to want to put that infrastructure we know as a branch in the communities where poor people live and to take their monies $1 and $2 at a time. It's just too costly. But it's also too costly for this woman in Kenya that we were just talking about to access the bank. Because the bank, if she's lucky, will be 5 to 10 kilometers away, which is if she's lucky. But that still will take her more than an hour to get there, by foot first and then by bus. And she'll have to be in a long line at the branch because they have no intention of dealing with her with any good service. So by the time she's done, it'll take more than 2 hours to do a simple deposit withdrawal transaction. That's a quarter of her day's earnings gone. The bus ride round trip might cost her another 50 cents. If she's earning $2, that's another quarter of her daily earnings. So half a day, the earnings of half a day just to make a little deposit and withdrawal. I don't think so. We'll go back to hiding the cash in the house. So how are we going to solve this problem? Well, the first and urgent thing is to get banking out of these things, what we call the banking halls, the branches. This is a branch, happens to be in Tanzania. Big building, communicates a lot of trust, but it's just not located where poor people live. And they're not catering to good service. You can see the huge lines that form, if you can call that a line, because it's payday and the bank has not set up the facilities to serve them. So how are we going to do this? Well, why not take banking to these little stores that exist everywhere? These happen to be in Brazil and in Colombia. why can't I make a little deposit, make a little withdrawal at these corner shops that exist in every village and in every neighborhood? And that's where technology comes in. We can make this a trusted transaction. How? With infrastructure that we use ourselves in our daily lives. Give them each a bank card. Install a point-of-sale terminal at the store. And all of a sudden, you can do transactions in an entirely safe way. Use technology to make sure the bank authorizes each transaction and records each transaction in real time. And make sure that transactions are happening against the bank account of the store. So if I go to a store, I want to make a deposit, I'm giving them cash, so they need to give me a bank transfer in real time. The moment I give cash, money goes from their bank account to mine. I leave the front door of the store, transaction is settled. Money is in my bank. That's where technology comes in. So what have we done so far? We've reduced cost. We've taken big chunks of cost out. We've removed the infrastructure cost of the brick and mortar and the teller salaries, and instead we're giving small commissions to these stores in the community to serve their neighbors. That's still too costly. This technology platform is way too costly. So the second trick is, why give cards to every person when they already have one sitting in their pocket, which is a SIM card inside their mobile phone? And why give that point-of-sale terminal to the store when they already have one? It's their mobile phone. So by using technology that already exists, we can actually not only reduce the cost of the brick and mortar and the salaries of the tellers, we can also eliminate the capital expenditures to make this platform work. Okay, that's not going to work for everyone yet, but still, there's an estimated 1 billion people who have a mobile phone but no bank account. We can start there. In Africa, penetration of mobile phones is now 40%, and you know that's only going to get better. This vision is already happening in many countries around the world. The more card and point-of-sale based terminal, more prevalent in Latin America, started in Brazil, where there's 50,000 stores serving as cash-in and cash-out points for banks. And on the mobile side, the most exciting project is the one in, well, I shouldn't call it a project anymore. It's M-Pesa in Kenya, a system that works entirely through the mobile phone. In 3 years since it's launched, it's managed to attract 9 million customers. Well, that happens to be 40% of the adult population of Kenya are using their mobile phones to make deposits and withdrawals at those stores and to send money to each other. 40% of the adult population in just 3 years. That's 60% penetration in the customer base of the mobile operator. What mobile data service has achieved that level of penetration anywhere, never mind developing countries? So we're inspired by these successes to think that we can bring low-cost banking to poor communities. We think it takes new distribution models. Why is banking set on direct distribution? It's my stores. Why don't you leverage stores that exist everywhere? It takes application of technology that exists today. It's the trick of real-time communication, so you can securely send an instruction, send money to person X. And it takes partnerships. It takes bringing together the worlds of banking, telecommunications, and retailing to make it happen to poor people. If I can find toothpaste and bread and prepaid airtime cards in every store, why can't I find financial services that don't require delivery of any physical product? It should be easier. We should draw inspiration from what the mobile operators have achieved. Today, in many developing countries, in India, in Kenya, you can buy a prepaid card that has a value of 20 cents. The mobile operators have found a way to dip into customers' pockets 20 cents at a time, and they're making money from that. We need to achieve the same thing for banking. So we at the Gates Foundation are very focused on this as a technology platform solution that we think will open the way for delivery of a broad range of financial services to poor people, and achieve it in the 3 ways that is important to them: convenient, meaning near me, and good service. Second, trusted, delivered by people who care about me and who I know will be there when I need them. and affordable, that I can do this for transactions as small as $1 or $2 at a time. And that's why we've given so far $400 million in grant funding to experiment with these types of solutions. Thank you very much.